Hi everyone, this is Raul Amesqua with the Hanover Group at Keller Realty here in good old Rancho Cucamonga, California. And today we have the fortunate opportunity to interview Seth Anapolsky from Full Circle Home Loans. Seth, why don't you take a moment and introduce yourself?
Thank you very much, Raul. I'm very excited to be here. Again, my name is Seth Anapolsky. I'm the owner of Full Circle Home Loans. We're a mortgage brokerage, and I'm excited to answer some questions today.
Seth, let's ask one of those biggest questions that's out there the public is always asking. What's the advantage of working with a broker like yourself as opposed with a large institutional or direct lender?
That's a great question, and I think that they all have their advantages. Big institutions, direct lenders claim they can do a lot of things that brokers can't, but in reality, they're very much the same. And the biggest component is brokers have the most flexibility with their clients. And what that means is if you have a client that's a particular scenario and only one option is available for one institution, well, broker has hundreds of institutions to choose from, and that's the huge advantage, is giving the flexibility to the client for multiple loan programs. And in addition to that, interest rates are better at various banks, and we have the options as brokers to shop that around and pick the best institution or lender for you, the client. So that's why I like the broker model, and I think it's better.
So what you're saying is like a lot of times if you're at an institutional lender like a bank or a big lending organization, it's kind of like they want to try to stuff everybody into one size fits all, where you're more of a custom tailor kind of figuring out the best programs, best rates for the client.
I really like how you said that, and I think that in my opinion that is true, but there are some great direct lenders that I've also, some colleagues I've worked with that are awesome, and they have a little bit more flexibility, but I don't think anything compares to the broker model, and I think that that's true. We don't treat clients as just a number fitting in a box. We treat them as the personality and what they want specific for their needs, and I think that's the key.
That's great, thank you. Seth, the next big question that we face this as professionals, us on the real estate side, you as on the mortgage side.
Right.
People start looking for homes when they've made that mental decision,
Yeah.
whether they're an individual or a family or a couple, they get very fired up, they get very excited, right?
Oh yeah.
So, in your professional opinion, when someone has made that decision to start home shopping, what are the first things they should do?
Yeah, I mean, buying a home is probably one of the most exciting events of anyone's lives, and it's an awesome experience, and we're, as brokers, as realtors, we're very excited to be a part of that transaction. The key, number one, no matter what, is getting approved. Even if you decide to go with a direct lender or institutional lender as opposed to a broker, you need to get approved for various reasons, but most importantly, you need to make sure you can qualify for the home you want, and you need to know what is the actual monthly payment for the homes you are looking at before just looking at a home and falling in love with it and then realizing, oh wow, that's a really high tax rate and that's a much higher payment than I would prefer. You need to know that beforehand before you get in the car and really start getting super emotionally attached to those properties. That's what I highly recommend. And a lot of high caliber realtors will not show you properties until you are approved anyways. So I recommend getting approved from any reputable lender.
Seth, another question that constantly comes up being in real estate, especially in the business of selling homes, people often have this misconception or this belief that they have to put 20% down. Can you tell everybody in the audience, is that true or not true?
Yeah, I'm shocked how many times I hear from prospective clients, oh, I want to buy a home, but I don't have 20% down. And that's just not the case. It's great if you have 20% down, but with prices increasing, that's very difficult. So you can go as little as 0% down if you're a veteran. VA loans are 0% down. There's USDA loans that are, if they're in the right designated mapping areas, those are 0% down as well. FHA is 3.5% down. There's conventional loan programs with 3% down, 5% down. There's even down payment assistance if you qualify, if you meet that criteria. So there's tons of programs. You do not have to go 20% down. If you go less than 20% down, typically there's PMI, mortgage insurance, but it's actually not that bad. And if you have a professional explain to you the differences, you can potentially buy it out as well as an option.
Seth, and obviously we know home prices have been rising quite a bit since the 2010, 11, and 12 era. And right now I've been talking to a lot of, especially younger people that are, shortly out of college or graduate school. And some of them are being pretty savvy and moving away from single family homes and looking at actually buying a triplex or a fourplex. and using FHA. Now, can you share that with us a little bit, insight on how someone can do that?
Yeah, FHA is a fantastic loan. I actually have one of my properties is an FHA loan. I highly recommend it. Amazing interest rates, and the flexibility is just unmatched in my opinion. And you can buy a one-unit single-family residence, a condo, to even a 4-unit property with FHA, which is pretty amazing, which is as little as 3.5% down. So I would highly recommend if you can qualify to explore that idea.
So like in LA and Orange County, like I believe like the FHA loan limit we were talking about earlier is like 1.25 million on a 4-unit in that county. So that means approximately $40,000 down, somebody could buy an income producing property and have probably a minimal mortgage payment at the end of the month, right?
I think that's very possible. You want to sit down with your professional to go through the math and make sure it pencils out if it wants to be more of an investment. But the intent of FHA is minimum down. They have to occupy the property, but ultimately you can get a great investment at the same time with minimum down.
Awesome. And Seth, let's talk about the other hurdle. A big part of mortgage lending is having the right credit scores, having a good credit history. Mm-hmm. And a lot of times it's not uncommon, and people shouldn't be ashamed, that their credit just doesn't meet the minimum criteria to get an FHA loan or conventional loan, whatever they're pursuing. Mm-hmm. What can you talk about how people can, how important it is for people to meet with you, sit down with you, so you can review their credit and then give them the proper instruction on how to get their credit better?
Yeah, it's a great question because credit is one of the 3 major components of buying a home. Down payment's the other one, and debt to income's the third one. But credit is probably the most common one, and everyone, free credit report or whatever Credit Karma people are using, they think their score is one thing, but in reality, when we do a mortgage tri-merge FICO report, which is the most detailed report, it a lot of the times is lower. And unfortunately, a lot of clients and customers are very disappointed to learn that their score is a lot lower, and that could affect what kind of loan programs. So what we do in our company and a lot of the professionals out there that understand credit do is they'll just analyze the whole credit report. Now, we're not a credit repair company, but I understand it very well. I've taken credit repair courses, and some of the things you can do is a simple collection you may have had when you were in college. Maybe it was a medical bill that you overlooked and moved away and didn't even know you had it, and it's $50. I've seen it all the time. And you can usually call and negotiate that to be completely deleted, and that could raise your score substantially. The other thing you could do is you want to keep your credit card balances ideally 25% or less than the high limit. So, for example, if you had a $1,000 limit, you want to keep it at $250 or less, and you want to be actively using the card. That's how you build credit. So these little tricks like that, they're not even that difficult. We personally look at every client's folder or their portfolio of credit, and we try to do what we can to improve it to give them more options.
So it sounds like what you're saying as well, Seth, is that people, no matter what, if they're thinking about buying a home, whether they want to buy today or they want to buy 6 months from now, 12 months from now, it's better to have them sit down with a professional like yourself, run their credit so you can analyze it and tell them, yes, you will be ready to buy now or in 6 to 12 months, or no, you're actually not ready to buy. These are the things that you need to do to get prepared to buy.
I cannot stress that point any more than how you just said. That is amazing, very well said, and exactly what I recommend to every client. And that is, no matter when your timeline of buying a home is, it could be tomorrow, it could be a year, you need to, obviously if it's tomorrow, you need to get approved. But if it's a year from now, you want to get started because there could be things preventing you. And when that year passes, you had no idea that you had this credit issue, or you didn't know that you shouldn't charge up a new TV or something right before you're going to buy a home. It's very important to get a full review of your entire file, from your income to your assets to your down payment, co-signers possibly, credit review, everything possible before you even get in a car to look at a home. And no matter your timeline, I recommend to do that and get started.
Yeah, it surprises me so much how many people don't heed that advice. They don't get in front of their mortgage lender and review their credit report to see what their abilities are or aren't right away. Yeah. And it costs them nothing.
Yeah, it's exactly. Most brokerages are free of charge to do an initial analysis, and as my company is, we do not charge for any type of a review. And you get a free copy of your credit report, and at least you can review that, and hopefully it's where you want it to be.
Seth, I want to share this point with the audience. Actually, you're in a unique situation because you are the broker and the owner of Full Circle Home Loans. And I know when I've interacted with your clients, they all really feel that they had like a special connection to the whole process and to you as well.
Thank you.
And I really want you to talk about the advantages of working with a broker owner as opposed to maybe working with a loan officer. Not to say there's anything wrong with that, but working with a loan officer maybe at a bigger institution. Right. Or a smaller institution, but versus someone that's an actual stakeholder in the company?
Yeah, it's a great question, and I've worked with and interacted with and have colleagues that are loan officers that are fantastic, highly ethical, great individuals, super knowledgeable professionals. So there's nothing wrong with working with a loan officer, but I do think there's an advantage to work with an owner and broker for a couple reasons. Number one, we care about our clients being super happy and satisfied. I as a loan officer, if you just work for a company, it may just be a passing point for you. It may not be something that you really passionately care about. But as an owner, this is what I care about. This is what most owners, they want the client to be nothing but happy. So I do everything I can in my power to make sure the client is completely happy, satisfied, and is going to recommend their friends and family. The other thing that's really cool is as the owner, I don't need to ask my manager if I can beat this interest rate or anything such as that can really show a benefit to the client. So when it's presented to me that there's a quote, I beat it, and that's what I do very well. And I think as an owner, it's really a huge opportunity for me, and that could be an advantage.
So what it really sounds like is the advantage of working with clients working with you is that one, they get great service because your business is built on that, or else you won't be in business, right?
I hope so. Yes.
Right. And then the other thing, it seems like you're very nimble, meaning that you can get them a quick response without delays, red tape, and saying, you know what, guys, after further review and analysis to be competitive, this is the best I can do. And that's right there in the black and white for the client.
Yes. As a broker, we cannot definitively say we're going to lend you the money because that's what brokers do not do. Brokers approve the package and then have to submit, and an underwriter will be the final decision maker. But at the end of the day, a typical loan officer may not have the experience or the knowledge to know if that's a file that's going to need an exception or not. And as the owner, I don't ask anyone but the underwriter. So I think that's a huge advantage.
Gotcha. So you're really cutting a lot of people out of the process. It's really the client, you, the lender's underwriter, and
Correct.
Together you create that synergy to give them the result they need.
Exactly.
For the client. That's perfect. Well, Seth, why don't you tell the audience out here how they can get in touch with you if they want to buy a home or refinance a home or maybe look at buying some investment property?
Yeah, I'm available 24/7. You can call me. You can text me at 951-538-6093. You can email me at seth@fchomeloans.com. And my website is www.fchomeloans.com. We're on Yelp. We're on Facebook. Check out our reviews. Be more than happy to help you in the future.
And you do loans all up and down the state of California, is that correct?
Yes, as a licensed mortgage originator, we're licensed in the state of California. So I've done transactions in the Bay Area, and I've done them all over Southern California, Central California. Wherever you need assistance, I can be available to you.
That sounds great, Seth. Thank you so much for joining us today, and I know our audience is going to really get a lot out of hearing this Q&A that we had today.
Thank you very much. I really appreciate the opportunity to speak to y'all.